Now to the economy, lots of questions after the latest jobs report and sell-off on Wall Street. New fears of a recession, even as inflation is easing up. Rebecca Jarvis is here to take on the questions. Let's start with what happened. Jobs report comes out on Friday. Huge sell-off on Wall Street, cascades over the weekend. We're seeing it all over the world right now. What's going on?
Well, and you bring up an important point because it is around the world. So yes, there is this disappointing jobs report. There are these recession fears, but one of the big trades that has propelled the stock market higher is AI. It's the tech trade. Those are some of the stocks that have been hit the heaviest, and now we're seeing it be international. You have what's happened overnight in Japan, so that's all playing together to drive stocks lower here.
And we're seeing inflation easing up, but a lot of people still having a hard time making ends meet.
Well, and inflation has eased up, George, by a significant amount. But when you look back at where prices were 3 years ago, they've come up a lot. And so the typical family is still spending about $1,000 a month more on the same goods and services as they were a year ago. Even if you factor in the increases they've seen in their wages, it doesn't feel like they're getting ahead in that regard. You have also what the Fed has done to fight inflation. They have been increasing interest rates for a long time. It's why a mortgage is more expensive now. That can disproportionately impact lower earners because people are more dependent on their credit cards if they earn less, and people are taking more advantage. Also, those pandemic era savings, people sat on their hands for some of the pandemic. They saved a lot of money as a result. That's mostly gone. And then there's the FOMO YOLO economy. People literally, George, see it on social media, feel like they have to spend money. They do. Now they're in credit card debt.
Now we're almost certain to see rate cuts, certainly by September, maybe even earlier.
That's right.
What is that going to mean?
So it's good news if you are carrying a large amount of credit card debt. And in fact, people are taking on more credit card debt. The average household has more than $7,000. If you go back to 2021, when the APR on average was 15%, that would cost you $90 in interest. Today, at today's rates, it's $126. So when you see rates go lower, you should see those APRs go lower as well. The important thing to do ahead of those rate cuts is to lock in a CD right now with your money because you'll get paid more for your money in the bank.